Hi Chua, welcome back.
Hi.
Can you guys see the course info?
No, sir.
Wait, screen. Can you guys see the course info?
Yes.
Okay, so this is the our course info for this subject. So this is all the basic info. Academic session 2020-21, semester 1, course code BIE2012, course title business valuation. Since we have one international student from China, so the course will be conducted in English. This is the reference, suggested reference for this subject. So you may use any other books, but this is the one that we suggested. And if I'm not mistaken, you can get these books from the library. So the learning strategies, lecture and tutorial. This is the students' learning time. So this is the name of the lecturers who will teach this subject. Room phone number and email. So our lecture will be today, 11 to 1. Since we are doing online lecture, so don't worry about the studio. So tutorial will be on Wednesday, 9 to 11. So the assessment. So there will be 60% of continuous assessment, which consists of 20% for test and 40% for assignment. And the rest 40% is online examination. If I'm not mistaken, for this semester, you will also have to do online examination like last semester. So for your assignment, there will be 30% for your report and 10% for presentation. So I will discuss with Dr. Zai on the question or the task that we will give to you. So perhaps we will give the task next week, in week 2. So this is the proposed topic that you will go through for the next 14 weeks. So this week, we will go through some introduction of business relation, the fundamental of business relation, background of business relation, the terminology, why business are valued, so who should carry out business relation, etc., etc. So all this topic we will do during this first week. So next week we will go through some other fundamentals of business relation. Then we will go through the business valuation process. So on the week 3, we will go through financial statements. Week 4 also on financial statements. Week 5, we will go on data collection. So we will go through what is a goodwill, what is tangible, intangible asset, because in valuing a business, we have to value tangible and intangible asset. So that's why some of the practice valuers find it quite difficult to value a business. So even the practice valuer need a special training on business valuation. So Business Valuation Association of Malaysia are conducting a specific training for those who like to practice as a business valuation valuer. So the week 6 we will do on restructuring financial statements, and also week 7 we will go on restructuring financial statements. So week 8 and 9 we will do ratio and risk analysis. So week 10, cash flow forecasting model. Week 11, valuations for selected business. So Dr. Zai will select a few small businesses as a case study for our business valuation subjects. So week 11, 12 and 13. So you will do with Dr. Zais on selected businesses as a case study for our business valuation subject. So week 14, you will do your presentation. Week 14. So you will have your 20% test on week 11. So mostly the test is on my topics, which is topic from week 1 until week 7. So your assignment submission will be in week 13 if I'm not mistaken. So I will update you guys on the submission week later, and the assignment task. As I mentioned earlier, most probably I will give you the assignment task next week. I need to discuss with Dr. Zai first on the task, the questions. So far any question? This part is easy, right? This is only your current cost info, so no need to ask. So the next part, Hafizuddin, after 25 minutes baru nak. Now we will go through our first slide.
Sekarang kita orang kan ada student kita orang masih kerja lagi kan. Lepas tu boleh buat lah masuk kelas tadi. Lepas tu nampak macam barang-barang kedai belakang kan. Lepas tu Syarah PM dia private cakap tak apa, buat kerja kamu buat kerja. Macam tu je conglan anak tu.
Business valuation. So this is a definition on what is a business valuation. So business valuation is not a precise science. The value of a company determined subjectively. The value depends on what purpose, and the valuation is done for whom and what is the purpose. So this definition is given by London 2007. So basically it is so in valuing a company or a property, so there is element of your own judgment. So that's why it is said that business valuation is not a precise science. Of course, in valuing a business, it will involve some calculation, but there are also element of your own justification in deriving a value for a business. So please bear in mind, when we are valuing a business, it is not as simple as valuing a real estate or a property, because as I mentioned earlier, in valuing a business, there are element of tangible and intangible asset. So especially if the company is a big company, which involve a lot of intangibles such as intellectual property, the copyright, the patent. So with that sort of company, we will have some difficulties in value the business or the company. So there is no right way to estimate, since there are many factors influence it. The value is in the eye of beholder. Any price can be justified if there are others who are willing to pay for that price. So as a valuer, when we are valuing the business, we can only give advice on the value. After all, it is up to the potential buyer whether they want to pay the price according to our advice, or they want to pay higher or lower price. Depends on the buyer, meaning that those who want to take over the company. So as a valuer, we just do our job. We just give our professional advice on how much the business is worth in monetary form. So i.e. Let's say if from our valuation or from our investigation, we are in the opinion that the business value is, let's say, 1 billion. So the value that we advise the client is not fixed. It is up to the client. Let's say, even though if we advise the value of the business is 1 million or 1 billion, but if the potential buyer doesn't want to pay 1 billion, so it is up to the negotiation between the seller and the buyer. So as far as a business value is concerned, we are only giving our professional advice on how much should the company worth in term of money. So the best standard of value for market value is fair market value. So fair market value is a price that the interest would exchange hand between willing buyer and a willing seller. So same with when you are doing a real estate or property valuation. So fair market value, or in a real estate valuation we call it open market value. So the open market value is up to the willing buyer and willing seller, whether a willing buyer would be able to pay the price or not, or whether a willing seller are willing to sell the company at the certain price or not. So a fair market value is defined as a price that the interest would exchange hand between willing buyer from a willing seller when both are unrelated. Know the relevant facts, neither is under any compulsion to buy or sell, and all rights and benefit inherent in the item must have included in the transfer. So this definition of fair market value is given by Boger and Link in 1999. So far, any question? No question yet. Okay. You guys can see the slide. Hello, anybody home?
Can, Doctor.
At least I need some response. Otherwise, I will be short sendiri. I will keep talking to myself. So, let's continue. So, these all the definitions. The business valuation is the act or process of determining the value of a business, enterprise, or ownership interest therein. This definition is given by Nakwa. So business valuation is an exercise undertaken to determine the economic value of ownership interest in the business. So the theory and practice behind business valuation is complex, and the exact approach depends on the business size of ownership interest, either it is minority or majority, under consideration, definition of value. So this is all the definitions about business valuation. So the purpose of doing business valuation is maybe a legal or taxation purposes, or for a merger or acquisition of a business. So this could be the potential purpose of valuation for business valuation. It is either legal purpose, taxation, merger, acquisition, etc., etc. So we will go through as we do this subject for the next 14 weeks. So this is a background of business valuation. So a business valuation requires a working knowledge of a variety of factors and professional judgment and experience. So as I mentioned earlier, so doing business valuation is not as simple as doing a normal real estate or a property valuation. So because doing property or real estate valuation only involve tangible asset. But when we are doing business valuation, it will also involve intangible asset. As I mentioned just now, intangible asset could be in the form of a patent right, in terms of any type of intellectual property. So whereby the intangible asset ni you cannot hold, you cannot see with your bare eyes. It's not like a property. You can see the property, so easy for us to value the property. But for business valuation, since it involves intangible asset, so those who are doing the business valuation must have an experience and professional judgment in carry out their duty. We call it due diligence in doing the business valuation. So that's why currently in the market, so there are a few professions who are doing the business valuation, not only in Malaysia but in any part of the world. You just name it, in the US, in Canada, in the UK. So there are a few professions who are doing the business valuation. So among the profession who are currently doing the business valuation are lawyers, accountants, and valuers. So why lawyers and accountants are doing a business valuation? So we will come with the reason why later on. So, but as a valuer, in most of the country, a valuer claims that a business valuation should be under our portfolio because we are a valuer. So the name of the business is business valuation, right? So the valuer claims that business valuation should only be done by a valuer, not by an accountant or by a lawyer. So, but there are a strong justification why currently lawyers and accountants are also doing a business valuation. So it seems that everybody are claiming that a business valuation is part of their profession. They are the one who should do the business valuation. So this includes recognizing the purpose of valuation, the value drivers impacting the subject company, and an understanding of industry, competitive, and economic factors, as well as the selection and application of the appropriate valuation approaches and methods. So in carrying out a business valuation, the person who value the business valuation must ensure that they have selected and used an appropriate valuation approaches and methods. So by using appropriate valuation approaches and methods, we can ensure that the value that we are suggesting at the end of the exercise is the best value for the business. So let's say if you are doing a business valuation for a small company or for a small enterprise, it is not as complicated as when you are valuing a public or private limited company, because public and private limited company is in terms of size is much bigger than the small enterprises. So you may have difficulties in valuing a big business organization. So business evaluators appraise businesses and business interests of all sizes, from small proprietorship such as medical practices to large multinational corporations. They are also value specific intangible business assets such as patents, trademarks, employment agreements, copyrights, securities, and goodwills. So the one that are in the red color is the one that we should pay concentrate. We should pay attention on the patents, trademark, because this is all types of intangible asset. So this is the one that I'm talking about just now. The intangible asset, patents, trademark. So as a valuer or as a person who will value the business, how do we determine the value of patents, the value of trademarks, the value of employment agreements, the value of copyrights, securities, and goodwills? So that's why on this reason, that's why lawyers are come into the practice of a business valuation, because the lawyers claim that only lawyers know about patent, trademarks, employment agreement, etc., because patent, trademarks, employment agreement is something which is related to the legal aspects. So that's why the lawyers claim that they are among the profession who are able to carry out business valuation. So this is only the history or background of business valuation in the middle of 1900. As this is not important lah. This is the history of business valuation. You can go through by yourself. Again, this is the background. U.S. government then created the right circumstances for another viewpoint to form this revolutionary. So up until 1990s, the work of calculating business value was strongly done by accountants and actuaries. But the development of the internet and the information age further narrowed this specialty until business appraisers were able to strike out under their own banner. The National Association of Certified Valuators and Analysts, NACWA, was begun in this is the history of business relation in the US and Canada. So the before the establishment of NACWA, National Association of Certified Valuators and Analysts, most of the business valuation work is carried out by accountants and actuaries. This is as far as our country is concerned. In Malaysia, business valuation is a very new in Malaysia. So that's why from the beginning, the task has been carried out by an accountant, because they just follow whatever happened in the US. Because in the US, historically, the work for business relation is done by accountant. So that's why, as I mentioned earlier lah, currently there are 3 professions who claims that they are the right person, they are the right profession who should do a business valuation. But there are some parties that claims that the business valuation should be done by a combination of a valuer, accountant, and a lawyer, because there are some aspect that accountant does not have expertise in carrying out a business valuation. Same with the lawyers. There are some elements or some part of the business valuation process which they are not familiar with. So that's why some parties claim that by right, the business relation profession should be a combined profession between a valuer, an accountant, and a lawyer. But of course, the professions are not agree with the idea of a combined a combined workforce to do the business relation, because everybody claim that they are qualified enough carry out a business relation. Valuer said, oh, no. As a valuer, this should be our job. Accountant also said that, oh, this is our job because it will involve the financial statements, it will involve the financial ratio analysis, which a valuer cannot do it. So then the lawyers claim that, oh, no, it will involve intangible asset, which only the lawyers knows about the legal aspect of the tangible asset. So as it is now in any part of the world, there are arguments between these 3 professions on who should do the business relation. So it's same with facilities management. So like for facilities management, the building surveyor says that facilities management should be their job, but the valuers, property managers said that facilities management is part of their task. So the argument will never end. For the past 10-15 years, for the facilities management profession, the argument is never end. Everybody claims that facilities management should be under their job scope. So the engineers also claim that facilities management should be their task to do. So same with business relation. So it seems that everybody claim that they are qualified enough to do the business relation. So this is the professional bodies locally and internationally with regard with business valuation. So at the international level, we have National Association of Certified Valuators Analysts, which is known as NACWA in the US, and we have Certified Valuation Analysts CVA also in the US. So in Canada, we have the International Institute of Business Valuers, IIBV. So we have American Society of Appraisers, ASA USA. We have also American Institute of Certified Public Accountants, which is also doing the business valuation in the US. So we have International Association of Certified Valuation Specialists, IACVS, Canada. So we have International Certified Valuation Specialists, ICVS. So this is the professional bodies, the international bodies, which the Business Valuers Association of Malaysia is working with in training business valuers in Malaysia. So most of the business valuation courses in Malaysia conducted by BVAM is with the joint venture with IACVS. So the BVAM will organize the course, but all the materials and the examination will be conducted by IACVS. So to join the business relation course organized by BVAM, you have to pay 3,500 ringgit to get the certification. So you have to go through 3 full days workshop, and then at the end of the workshop, after 2 weeks, you will have to sit for the exam. You have to answer 300 multiple choice questions within 5 hours. And then the passing marks is 65%. So upon passing the examination, and then you will be given a special task for you to do as a case study. So once you pass the task, only you can get a certificate to practice as a business valuation practitioner. So in order to practice as a business valuation practitioner in Malaysia, you need to sit for the exam and pass the exam, and then after that you need to do the specific task on a business valuation, like a case study lah. The IACVS will give you a simple case study for you to value, and then you have to do the valuation. You have to submit the report to IACVS. So they will go through your report. They will mark your report. So if your report is okay, and then you pass the task, and then they will give you certification. So with the certificate, you can practice as a business valuation professional in Malaysia. So currently we have around 300 or 400 valuers who have taken the examination. They have joined the workshop, and they have passed the examination. So, but some of them decided not to do the specific task. So they only pass the exam, but they don't do the case study task. So as a result, even though they have passed the examinations, but without doing the case study, they cannot practice as a business valuation valuer in Malaysia. So you need to take and pass both part, examination and the case study. So this is some basic information about IACVS. So IACVS was founded in 2000 to provide worldwide support. So for Asia Pacific, the regional office is located in Hong Kong or China. So for Asia Pacific, the regional office is in China, Shanghai, China. So IACVS is the first and only international association to provide such support. So you can have a look at their website, but to access to the materials you have to pay. Once you pay for the access fees, only you can go through to the online materials, the references, the exam questions, everything. So IACVS objective is to transfer best practices in both fields of endeavor. So in the valuation field, IACVS promotes uniform application of valuation theory, approaches, methods, and models. So in the field of fraud, deterrence, and forensic accounting, IACVS encourages the development and dissemination of consistent and demonstrable systems and techniques for both detection and prevention of fraud. So this is some background of the international bodies who are sort of controlling the business valuation profession worldwide. So IACVS is responsible in providing training and professional guidance to those who wants to practice as a business valuer in any country in the world. So if you all are aware, there are no specific guidelines with regard to business valuation. Like for a real estate valuation or property valuation, in Malaysia we have our manual, which is the red book. At international level, we have International Valuation Standard, but in Malaysia, we have Malaysian Valuation Standard, MVS. MVS is for normal valuation practice with relates to the real estate or property. But as far as a business valuation is concerned, there is no specific guidelines for a business valuation. So International Valuation Standards have created a sub topics in International Valuation Standards for business valuation practices. So same with the Malaysian Valuation Standard. They only have a small sub heading for business valuation. They don't have a full standards for the business valuation. I'm not sure whether in the future they will prepare a specific standards for business valuation. But as far as the current practice is concerned, there is no specific guidelines or standards for business valuation. either locally or internationally. So currently they just insert a small subsection under current Malaysian valuation standard and international valuation standard. So I think most of you guys are familiar, right, with the Malaysian valuation standard, the Red Book. Red Book ni is our main reference for our profession in doing valuation for property or for real estate. Like for property management, they have their own guideline. Yeah. So this is the terminology that you will come across in business relations subject. Adjusted book value method. So what is adjusted book value method? Adjusted book value method is a method within the asset approach whereby all assets and liabilities, including off-balance sheet, intangible and contingent, are adjusted to their fair market values.
Aku nak mengatuk dengar kau ni.
In Canada on a going concern basis. So adjusted book value method is a method within the asset approach whereby all asset and liabilities are adjusted to the fair market value. So if you are using adjusted book value method in valuing a business, meaning that we are doing a method which adjusted all the company assets and liabilities to their fair market value. What is fair market value? Anybody? Do you have any idea what is the fair market value? Chua, what is the fair market value, Chua? Chua is sleeping.
Tak tahu, bos.
Tak tahu? Ayo, Chua. How come, Chua? Ikwan, what is fair market value? Ikwan, are you enjoying keropok leko with teh tarik now? Din, what is fair market value, Din? Mr. Hafizuddin, what is fair market value? Afiq, fair market value, Afiq? Ayo, everybody sleeping ah? Who's calling?
Fair market value is a price where property the property would change hands between a willing buyer and willing seller.
Is it right?
And then both parties have relevant facts and acknowledge the factors affecting it, something like that.
Hey guys, you are now a third year student, so by right you should be able to memorize what is fair market value, what is the open market value. So all sort of definition of values by right is you can easily give the definition if somebody asks you what is fair market value. So because you are now third year students, so it's okay. Asset-based approach. So asset-based approach is a general way of determining a value indication of a business ownership interest, or security using one or more methods based on the value of the asset of net liabilities. So we can value the business either using adjusted book value method, or we can also use asset-based approach. So beta, what is a beta? Beta is a measure of systematic risk of a stock. the tendency of a stock's price to correlate with changes in a specific index. Anybody, can you name what is type of systematic risk? What is systematic risk? Because normally we will...
The risk that we cannot avoid, something like market risk.
Okay, because when you are doing your investment subjects, normally we will be introduced with two type of risk, right? It will be systematic and unsystematic risk. So systematic risk is some type of risk that we cannot control, right? It is beyond our control. Unsystematic risk. What is unsystematic risk? Ini kena buat tutorial balik ni. What is systematic risk? What is unsystematic risk? What is fair market value? What is asset approach, market approach, cost approach, income approach? You guys, you better wake up and do some revision on all those basic knowledge on valuation, because we might need to use those information when we are doing this business relation. Cannot sleep anymore. Blockage discount. Blockage discount is an amount or percentage deducted from the current market price of a publicly traded stock to reflect the decrease in the per share value of a block of stock that is of a size that could not be sold in a reasonable period of time given normal trading value. So we will go through what is beta, what is a blockage discount as we proceed with this subject for the next 14 weeks. I'm not going to ask you anymore because you need some time to recall your memory on all these terminology, everything lah. You need to do your own revision before our next lecture. Book value or net book value. So what is book value, net book value? So you need to familiar with all this terminology. What is book value? So with respect to a business enterprise, the difference between total asset, i.e. net accumulated depreciation, depletion and amortization, and total liabilities as they appear on the balance sheet, which is known as a shareholder's equity. With respect to a specific asset, the capitalized cost less accumulated amortization or depreciation as it appears on the books of account of the business enterprise. So you need to know what is a book value or net book value. So that's why, as I mentioned earlier, while we are doing the business relations subject, you need to be familiar with financial statements, especially the balance sheet and income statement. You need to know the items which is listed under the balance sheet and the income statement. You need to know every details, every single details in balance sheet and income statement. So what is type of asset which is listed under balance sheet? Kan? Fixed asset and current asset. What is example of fixed asset? What is example of current asset? Why asset is important to the company? So same with the liabilities. So what is the differences between current and long-term liabilities? How the liabilities affect the business ability to pay debt. So you need to know all those factors factors. So business enterprise is a commercial, industrial, service or investment entity or a combination thereof pursuing an economic activities. So this is a terminology or a definition of a business enterprise. So when people ask you what is a business enterprise, so business enterprise is either a commercial, industrial, service or investment entity or any combination thereof which are pursuing an economic activities. So economic activities meaning that they are doing business with the hope of generating income or profit. Business risk is the degree of uncertainty of realizing expected future returns of the business resulting from factors other than financial leverage, i.e. barriers, competitors, raw materials, etc., etc. What is financial leverage? You have learned kan about financial leverage in your investment analysis or your corporate punya subject tu. Afiq dah belajar kan what is financial leverage? Afiq tidur ni. Korang ni kalau tak on video tidur je. Business relation, the act of
financial leverage katalah macam people using the debt borrow from the bank to purchase some assets such as property.
Tak apalah, you seorang saja yang jaga, you seorang saja yang jawab, orang lain semua tidur. So nanti kita bagi dia orang minum kopi lah, bagi dia orang bangun dulu supaya dia orang aware kan, boleh tolong jawab sikit-sikit. Tak adalah you seorang nak jawab kan. Tak apa. Apa ni? Business relation is the act or process of determining the value of a business enterprise or ownership interest therein. So this is the terminology lah yang you need to know for business relation. So CAPM, what is CAPM? Capital Asset Pricing Model. You have learned kan? CAPM ni, Capital Asset Pricing Model. Dah belajar belum?
Yes, during the investment analysis.
Yes. That's why I said just now, you need to recall all the related subjects while we are doing business relations. So because you need to know, you need to recall back what is CAPM ni, Capital Asset Pricing Model ni. How does Capital Asset Pricing Models ni works? So CAPM or Capital Asset Pricing Model is a model in which the total cost of capital for any stock or portfolio of stocks equals a risk-free rate plus a risk premium that is proportionate to the systematic risk of the stock or portfolio. Determine the COE. What is COE? Cost of capital employed, right? COE apa? Cost of capital employed, betul?
Cost of equity?
Saya tak tahu. Tu yang saya tanya tu. Kan, when we are doing a capital asset pricing model ni, it is related to what? Cost of equity ke, cost of capital employed ke, cost of capital ke apa? You kena tahulah. Dekat sini tulis COE saja. Kan, if you understand what is CAPM ni, then you should be able to answer lah. COE ni cost of capital ke, cost of equity ke, cost of capital employed ke, you should know lah. Tapi kat situ kita letak COE saja. So you need to recall back. Banyak kena recall ni balik ni. Capitalization is a conversion of a single period of economic benefits into value. 1/I. Capitalization of earning method. So ini nanti you tengok balik lah capitalization rates semua. Why do we need to go through all this terminology? Because for the next few weeks you need to be familiar with all the terminologies while we are doing business relation. That's why this first week ni is a sort of dia macam nak recall back lah whatever topic or subject that you have learned before this business relation subject. So you need to use all the knowledge in the previous subject for the business relation subject ni, like CAPM. So those who are forgot already what is CAPM semua tu, so from now to the next class ni you need to read lah what is CAPM, what is cost of equity, what is capitalization, what is a systematic risk, what is unsystematic risk, what is beta, what is capitalization of earnings method. You need to know, to recall back all your memories from the previous subject that you have learned for the past 2, 3, 4 semesters. We are not going to recap balik all those topic that you have done for this business relation subject, because we don't have we don't have much time to recall all the subject that you have learned before. But as I said, you desperately need to recall back all those knowledge to do this business relation. So capital structure, what is a capital structure? Cash flow, what is cash flow? Common size statements. So cash flow is a cash that is generated over a period of time by an asset, group of asset, or a business enterprise. It may be used in a general sense to encompass various levels of specifically defined cash flow. When the term is used, it should be supplemented by a qualifier. For example, discretionary or operating, and a specific definition in the given valuation context. So what is a cash flow? Why cash flow is important in business valuation? Cash flow is one of the element which is very important, very crucial in business valuation. So you need to know lah what is a cash flow. So control premium, cost approach, cost of capital. Cost approach ni is a general way of determining a value indication of an individual asset by quantifying the amount of money required to replace the future service capability of that asset. Cost approach. Quantifying the amount of money required to replace the future service capability of that asset. You have learned kan cost approach in your valuation subject? Betul tak? You have learned kan cost approach in your valuation 1, valuation 2?
Yes. Kita sudah belajar.
So you need to recall back lah what is the cost approach. Kan while you are doing the cost approach for property valuation ni, the lecturer teach you on a cost per unit approach, betul? Yang itu semua tu lah. Cost of capital is the expected rate of return that the market requires in order to attract funds to a particular investment. Expected rate of return that the market requires in order to attract funds to a particular investment. Cost of capital. So cost of capital ni is break up into 2 types. Cost of debt and cost of equity. So for any businesses, we can gather our capital from 2 source or 2 types of capital ni, which is debt ataupun hutang, and equity. Equity adalah equity pemilik lah. The owner's money that they injected in the business. So either it is from debt or from equity, it will have dia punya own cost of capital. So normally the most common cost of capital for debt ni is the interest lah. Interest that you have to pay for your loan tu. That is one type of cost of capital. If you are using debt or loan to finance your business, but if you are using the equity, the owner equity to finance your business, there will be also involved cost of capital. So if I'm not mistaken, you have learned about cost of capital in your investment analysis subject. Kan? Dr. Ain'ni ke Dr. Rosli yang ajar you tu subjek ni, the cost of capital, or Dr. Olan? I'm not sure. Because 3-4 years ago, I'm the one who teach the investment analysis ni. So we teach you on the cost of capital, yang capital asset pricing model semua tu lah. Cost of equity, cost of debt. Yeah, so far any question? Yang today punya topik ni is very light topic, introduction to business valuation lah. Most of them related to the terminologies that you need to know for this subject. So some of the terminologies you have already learned in your previous subject. So what you need to do is just to browse through your notes and to just recall back some of the terminology that you have learned before. Discount for lack of control, discount for lack of marketability, discount for lack of voting rights, discount rate, discounted cash flow method. So this is again, as I mentioned, the type of terminology. Why I just wonder why in doing business valuation, why do we need to know discount for lack of control? What the discount for lack of control is to do with a business valuation? What is the relationship between all this discount punya heading ni with the business valuation? Anybody has any idea? Let's say, for instance, discount for lack of marketability. Why in carrying out a business relation, why do we need to consider? Why do we need to take into consideration discount for lack of marketability? Anybody has any idea?
Maybe this is because the business, when the people want to sell the business, it's very hard for them to sell in the market. So maybe we need to deduct some money. So for the easier marketability, for them to sell the business.
Because some type of business, it is very difficult or quite difficult to sell off, right? So since it is difficult to sell, so that's why when we are doing the business valuation, we need to give some discount for the lack of marketability. So this discount for lack of marketability is to ensure that we don't overvalue the enterprise or the company. Same with the discount for lack of control. So some company, some enterprises, we need to give some discount for lack of control. Some company we need to give discount for lack of marketability. Discount for lack of voting rights. So later on we will go through lah what type of company that we need to give discount for lack of marketability, what type of company or enterprises that we need to give a discount for lack of control when we are valuing the business. So discount rate, a rate of return used to convert a future monetary sum into present value. So rate of return ni all of you are very familiar lah kan. So when especially when you are doing the discounted cash flow kan. So it will involve a process of discounting the cash flow into the present value. So discounted cash flow method. So this is also, I guess you are very familiar with discounted cash flow. Those who are still not familiar with discounted cash flow, you need to make sure that you know discounted cash flow tu, how to compute the discounted cash flow. Let's say if the company has a series of cash flow, so how do we discount the cash flow tu? So it is very very crucial. Discounted future earnings method, a method within the income approach